Bitcoin is seeing a significant bounce from the 15,500 danger zone. Is this bounce leading to a macro reversal, or are we seeing another bull trap being developed? Let's go ahead, take a look at the charts and find out. Okay, what is going on, MegaWhale team? Welcome back to the channel, guys. Thank you for tuning into today's video. I hope you're all having a fantastic day. We're going to take a look at Bitcoin today and talk about the short-term price action, more focusing on exactly what is happening with the price action, talking about the possible reversal forming over here, and talking about whether or not this move will be a bull trap, essentially. And what we have seen in the last 24 hours is a nice reversal from this danger zone, this 15,500, 15,800. Of course, that was initiated by the breakout of the descending channel formation we discussed in yesterday's video. And the reason we call this the danger zone is because this is essentially that last line of defense before we see a continuation or a continued move towards the downside, which will take us around 13.9 to 14K, okay? So it really is that last line of defense right now, that last little bit of support we have before we see a significant continue to the downside. But before we get into it, guys, smash the like button, comment down below, let me know what you think, and obviously subscribe to the channel. If you're new here, we do daily videos of Bitcoin, as you can see, daily objective technical analysis. We focus on the charts, we focus on the data, and we help you guys identify and navigate through the chaos that is the cryptocurrency market. Now, obviously, join our Telegram channel down below, second link in the description. You'll get access to all of our updates, analysis, information, videos, charts, heaps of cool stuff in here, guys, to keep you up to date. Of course, if you're interested in trading, you can join 509 members in our trading channel. You get exclusive altcoin and Bitcoin trading signals with specific entries and targets, exclusive charts and analysis, and obviously you can see the trading signals over here. Let's go ahead and dive in. We'll get started as we usually do with our data. So, the monthly data still stands red. We are negative 15.28 for the month. Again, the first 4-quarter consecutive red months I've ever seen in Bitcoin's history, which is pretty negative, pretty upsetting, but hey, it is what it is. And for November, guys, negative 19.74. So we have actually climbed a little bit. Yesterday, we were around that negative 22, I think, or I believe, 23 even. We've seen about a 4.5 to 5% move in this recent rally for Bitcoin. So we are around negative 19.74 for now. Volatility has climbed from 4.11 to 4.16. So we're going to see that continue over the next few days. As we said already, guys, as the price action starts to move, we see volatility rise. So they are hand in hand. When we see these consolidations, okay, higher highs, lower highs, higher lows, lower highs, these sideways consolidations, we know that throughout this period, volatility is decreasing day on day. And when we see these directional moves, we know that volatility has spiked. Now, generally, when we look at the volatility for Bitcoin on the volatility index, it's over a 30-day period. So it averages out over a 30-day period. And therefore, if we have these long periods of consolidation, such as this, and we can go ahead and see that on the volatility index over here, such as these long periods of consolidation, we generally take a while to factor in any volatile moves or changes in volatility. They take a little bit of time. So we are going to see volatility kind of rise over the next few days. We have already started to see it exponentially rise as the price action becomes more volatile, as there's more volume in the market. As you can see, more trades, more volume, more liquidations, more price action. So that's kind of what we've seen in the last little bit. We've seen the price action move, we've seen volatility increase, and as volatility increases, the price action moves more. The swings are bigger, okay? So let's go ahead and talk about the rest of the market, but some interesting things are happening here, guys. We're seeing the DXY fail to hold above 107.5. We saw this rejection over here. We've pushed back down, and we're actually losing the neckline over here, which was that rounded bottom formation. We've actually dropped back below the neckline. What's that telling me? Is it telling me we're looking like we're going to push back down to 106. Now, there is a chance we develop some sort of descending channel or wedge, a very tight range here, before we see some sort of reversal. But what it looks like at the moment is unless we get above this 107 zone again, we're looking like we're targeting towards the downside. Of course, as the DXY falls, stocks and crypto rise. So this is generally looking more bullish. So the overall bias of the market, the overall bias, directional bias for today, for the entire market, is looking a little bit more bullish than it is bearish. And of course, the charts have been reflecting that. If we look at the total cryptocurrency market cap, we have seen two really good things. Number one is we close a daily candle within this range, okay? Meaning we did not lose this lower level. And number two is we opened our daily candle above that absolute bottom we saw over here in June. And that absolute bottom, guys, that actually lines up with the 2017 absolute top, okay? So not a coincidence. These are some pretty significant levels, and the total cryptocurrency market cap here has respected those significant levels, respected these supports, respected that 2017 all-time high, and is looking pretty decent. Now, if we do have a look at the immediate VRPV, we can see some volume chunks above us over here, again indicating some resistance. If we go to the Bitcoin chart, we can actually see that, again, we do have a lot of resistance sitting above us. We have these two resistance levels, we have this upper resistance, so we do know clearing through this range here is going to be quite a tricky range to clear, and we'll talk about that in later on when we get into Bitcoin's analysis in today's video. But the total cryptocurrency market cap, in terms of how it's looking right now, in terms of finding support, the levels it's holding, it's looking very good. Again, losing this level, guys, is the trigger for that continuation downwards, taking Bitcoin to about 14K, even potentially lower. So this is that level we do absolutely need to defend. And again, with these strong supports, the stronger and more significant the support, the more likely we are to see reversals, the more likely we are to see bounces or continuations, okay? So we're looking for reversal signs during this period. And that's what we said yesterday. Shorts are not favorable anymore. The moment we got into this level, guys, we should not be looking for shorts. The moment we got to this level, we're looking for longs. That's what we did in VIP. That's what we suggested you guys to do. And everyone who listened would be at profit by now. Now, this is where it's interesting. The Dow Jones is pushing past that 34,000 level. As you already know, guys, the 34,000 level is that horizontal resistance level that we have retested numerous times in the past to get that continuation. So we do need to see this daily candle close above here now. A daily candle close above in 19 hours will be incredibly bullish for Dow Jones. Again, indicating we have broken through its resistance and we're likely to continue upwards. That next resistance level, very simple, guys, we're taking to 35,000, okay? Psychological resistance level over here, okay? That is the next resistance. To the downside, of course, if we do lose these levels, we're looking at targets of these horizontal levels. This horizontal raise indicator on the chart if we do push down. Of course, if the DXY does continue downwards, we can expect this to continue upwards. That is, of course, bullish for the overall market. Looking at the S&P 500, a similar thing occurring. We're just peeking our heads over that horizontal resistance at 4,000, that psychological resistance. It does have quite some room to go. We still need to reach this upper descending resistance over here before we see any directional moves for the S&P 500. Again, we do have some distance to clear over here, so it doesn't really matter what happens over the next few weeks. For the S&P 500, we are really only going to be worried about the question, are we going to break through here? And if we do break through here, when it occurs. So that's kind of what we're waiting for. Until then, nothing too significant is occurring. Bond yields are starting to fall again, which is again bullish to the market. We did see some sort of reversal occurring, but it looks like they are dropping a little bit more. As bond yields start to fall, the strength of the dollar drops, the markets start to rise. So we are seeing, you know, some sort of falling in those 10 years or 2 years yet to respond too much. But that is a good indicator, a good leading indicator that the DXY could potentially fall more and the markets could see some more reversal. Let's go ahead and get into the analysis though, guys. So what have we seen in the last 24 hours, 48 hours, whatever? We saw a bounce from the danger zone, and we talked about the danger zone already. We saw a breakout from the descending channel. We've said if we break the descending channel, the next resistance we are heading to is this resistance here. We saw consolidation underneath that resistance. As you can see in the chart, I'm going to zoom in a little bit. We saw, what, maybe a little bit over 12 hours of consolidation just underneath that resistance zone. And in the last hour, last 56 minutes, we're seeing a rapid explosion. Like we said in yesterday's video, actually like we've been saying for a long time, at resistances, the longer we consolidate just underneath these, the pressure builds up, eventually make these explosive volatile moves. If we explode through it and go upwards, or we reject heavily and go downwards. In this instance, we did consolidate a nice triangle formation, ascending triangle formation, and we actually broke through and up into this pattern. Here is where it gets very interesting though, guys, because as you already know, guys, market structures, although the diagonal levels of the structures remain more or less relevant throughout the time frames, they can be drawn across. The structure itself can actually shift. Now I'll show you what I mean. So let's go ahead and just delete this descending channel. It's no longer relevant. We've completed that structure. This pennant formation, we are back in this pennant formation. So here's the thing. Going off the pennant formation, we are technically still bearish. This is a bearish pennant. We have broken to the downside. We've pushed back in. Unless we can clear this level, guys, we are still technically bearish. Unless we clear this level, we find a support and continue upwards, we are technically still bearish according to this market structure. But here is the statement that's going to confuse everyone. This market structure may not be the current market structure that's been developed, because what we can do is we can delete this line, we can copy and paste this line over, all right, develop a lower trend line, place it on our retest points of consolidation or points of retest, as you can see over here, and we do have that retest again over here. Obviously this is a fake out down towards support. We do have a descending channel. We have a descending channel formation or a bullish flag formation or reversal. So this is the question. Are we in a pennant formation, or have we now developed a descending channel formation? And here's what I'm going to say. The answer to that question doesn't matter. And this is why it doesn't matter. Because it doesn't matter if we're in a pennant or if we're in a channel, because the points of validation and trigger points still remain the same. Meaning it doesn't matter what we are in. If we do lose this level, we will continue downwards. This is the major support. And it doesn't matter what we're into the upside, because this upward resistance is actually going to be remaining. This upwards resistance is not the resistance or trend line that has been altered according to the structural shifts in the market pattern. Therefore, everything over here remains the same. Therefore, our upside remains the same. Our downside triggers remain the same. So therefore, it doesn't actually matter whether we're in a pennant, whether we're in a descending channel, whether this pennant can actually be drawn upwards. It's irrelevant. Now, what it does matter for is the short-term analysis. But we'll get to the short-term analysis as usual after we do a little bit of a macro overview, a larger time frame overview. So let's talk about, first and foremost, before we talk about the bull trap, we'll talk about what will it take for Bitcoin to continue upwards here, and what will we need to see for a reversal? So the most obvious one, guys, is we've cleared this resistance. Now we need to clear the next resistance. So the next resistance is 16,800. We have that diagonal resistance sitting around 16,750, just below it, and of course that major trigger sitting around 17,200. So breaking through this level here, breaking through 16,800 will result in a continued move towards 17,300. Now 17,300 is one of two things. It's going to be a horizontal range rejection point, meaning we're going to develop a horizontal range, okay, or it's going to be a trigger for a continued move to 18,165. The reason why 18,165 is such a key level is if we go to the macro chart over here, 18,165 is that lower support level, okay, on the Bitcoin chart, on the macro chart. So it means we'll be retesting this level again. A massive area of resistance or potential. If we do break through it, this will constitute this entire move down as a fake out, and we continue upwards. Okay, so the macro standard point of view, if we do start breaking through these resistances, we do actually need to push through here. Pushing through here would actually label this entire move as a fake out to the downside, and that would mean we're continuing to retest this diagonal. This is where it gets very interesting. If we retest this diagonal and break this diagonal trend line, okay, it will confirm we developed a falling wedge. We're broken to the upside of the falling wedge, and that is where we start looking at these horizontal structures again and triggers and reversal levels. The next one, of course, is 21,400. Breaking through that sends us up to 24,000. Breaking through 24,000 sends us all the way up to about 28.5 to 30K. So as you can see, very low volume chunks over here, a lot of resistance as starts to decline over here though, and we have this very low volume range until we meet this next peak. So to the upside, guys, if we start breaking through these levels, we're looking incredibly bullish. At that point, we can say confidently the macro reversal is in. I would say confidently the macro reversal is in. Once we start breaking through these levels, we're looking for a macro reversal to potentially initiate when we break through this descending trend line. Okay, I'm going to say it again. Breaking through this trend line equals macro reversal is developing. Okay, breaking through 24.4, macro reversal has occurred. Okay, breaking upwards on the short term to 18.9 means this level will be deemed as a fake out, and if it is a fake out, it enables us to retest this trend line. So that is what we're looking at on the larger time frame for the move upwards. Of course, to the downside, we already talked about that at the start of the video. So let's go back to the short term. So what happens here if we do reject? Is this a bear? Is this a bull trap? Could this be a bull trap? How low could we go from here if that is the case? Let's go ahead and dive into that now. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So, first and foremost, we're gonna go ahead and delete these trend lines. What we're looking for now is we're looking for points of resistance or possible trend lines that we've missed on the chart that we could go ahead and draw in. So the first one would be, of course, this trend line here. Okay, we're looking for this trend line across, and we have closed a 1 hour. We'll be looking for a 4-hour close, particularly on this chart, as we are on a larger time frame. This is quite a drawn out structure. This structure has been developing over about 14 days. So we're looking for a larger time frame close. So until we close this larger time frame candle, I would say confidently we haven't actually secured this pattern if it was a pennant. Okay, so we're looking for a 4-hour close above this trend line to basically confirm the fact that we have actually closed above this resistance level. We have actually reclaimed that resistance level, and we're looking pretty decent for a continuation upwards. On the short term, if that does occur, I would at least expect some sort of move towards the upside to retest this level. At a minimum, guys, of course, if we do come down and lose this level, we will actually be retesting this level, and if we fail to hold that level, we are heading back down. So we're kind of between a rock and a hard place here. We have a good opportunity here to push upwards, a great opportunity to make some reversals occur, but if we do lose this level, there's no moving like this. There's no moving down and back up, okay? If we do lose this level again and get rejected, this is going to be quite a strong rejection. It's going to be quite a strong bull trap, and we will aggressively come back down and retest this level. As we've said already, if we do retest this level, we will not hold this level again. If we retest it, we will continue toward the downside, okay? So, right now, the best thing to be doing when you're trading is not trading the range per se over here. Trade the zones, okay? So yesterday, again, we take longs here. We look to take some profits at this level. We hold our longs open. We'll continue to hold our longs open until we reach this level to take profits. Or if we lose this level again, we'll take profits and close out those longs and look for shorts, okay? So right now, I'm not too concerned about the immediate price action, but I'll be looking for confirmations of the price action to confirm whether or not these are bull traps or continuations. We've talked about the confirmation for a continuation. For a bull trap, if it does lose this trend line again, breaks through back down below this level, that will confirm this was a fake out to the upside and we are in fact in a bull trap, okay? At that point, we're looking for shorts back towards this range. We'll be taking profits in that range and opening new shorts if that range is lost again, okay? Keep it simple, guys. Don't overcomplicate it. Trade your ranges. That is always going to be the best thing to do, okay? So let's go ahead and do a quick technical analysis of Bitcoin on the immediate medium-term time frame. So I'm going to go ahead and delete all of this. We'll go ahead and start on a 12-hour. We haven't done a 12-hour analysis for a while. We usually do our larger time frames. Let's go ahead and do our 12-hour analysis. Now, before I do that, I want to go ahead and flip the chart, actually. Let's see if we flip the chart, if we can see anything different over here. So we'll go ahead and draw our structures in. We'll go ahead and draw these trend lines in. It is on dotted. I'll go ahead and quickly change it to linear. Perfect. There's our trend line. We do already know if we lose this level, we are going to reverse on a larger time frame. We've already talked about that, okay? These uptrending support lines eventually do break. So at some point, we can expect this trend line to break, and that will be the reversal, okay? This trend line, whether it breaks now, whether it breaks later, whatever, it's going to extend at some point, and that trend line is going to be the point of reversal, or the point that will initiate a reversal. Whether reversal actually sustain, that's another question. We need 24,000 to break at that point, okay? But this trend line will be the point of reversal for the larger time frame. Again, whether or not we go down to 12,000 and come back up, this trend line is still going to be that point of reversal on the chart, according to what I'm seeing on the chart right now. Okay, so we can draw that trend line across. If we go ahead and take this line over here, we can draw that across, and we can see we do have some degree of rising wedge over here. And again, rising wedges are bearish patterns. Breaking to the downside will result in a reversal. So let's go ahead and just flip it back to normal and bring up some of our indicators. We'll start with the Ichimoku cloud. Let's take a look at the trend. So 12 hour, it's not telling us much. Of course, we have broken through a blue line, the conversion line, so that's looking pretty decent. The larger time frame, of course, it's going to start looking more bearish. So as we start moving to that larger time frame, it's going to look more and more bearish. As you can see, 3-day, much more bearish. As we start moving to that smaller time frame, this recent reversal is going to start factoring in. It's going to smooth out. We're going to see a little bit more bullish. So on the 4 hour, we're over the conversion line, over that baseline. On the 1 hour, we're probably pushing past the clouds. Yeah, we're pushing past the clouds. So the smaller time frame is looking decent here, but again, it is lagging. So you do have to keep in mind that this is not an entry point for the price action according to Ichimoku cloud. What we're looking for here on the 12 hour, we'll be looking for a cross of that baseline on the 12 hour. That would be ideal. And when that occurs, we'll start to see that price start moving up on the daily. What I'd like to see would be two things. If we're looking for a safe entry in the larger time frame, I'll be looking for the price to be above the clouds, okay? But I'd also want this green line, this lagging span, to be above the clouds too. When we have the price and the lagging span above the clouds, we see stronger swings to the upside. That was quite a strong swing over here, okay? Moving it back, we see the price, okay? And the span above the clouds, we see these stronger swings to the upside, these continued swings, okay? We can go back in time. I can show you many examples. Price, okay, and span above the clouds, we see these longer term continued moves. So we're looking for that for the larger time frame. Of course, if you're waiting for that, you're not going to catch the bottom, but it's a good confirmation for that trend if you're waiting for it. Let's go ahead and take a look at the Gaussian channel. Okay, Gaussian channel on the daily is going to show similar things to Ichimoku cloud, a lot of resistance above us. We do have some some convergence towards the downside on the Gaussian channel over here. Again, quite a lagging indicator, but with these slower indicators, we generally see more significant points of data if they do pop up for buy signals on larger time frames. As we can see over here, we did break through the Gaussian channel 3 times on this chart, 3 individual points. Of course, this is a rejection. This was that 200-day moving average rejection, so we can cancel that out. That didn't make it through, we can cancel out. And this was a 50 moving average rejection, we can cancel it out. So every single time we've actually pushed through the Gaussian channel, we've actually met a massive period of resistance. Now, usually when we do push through a Gaussian channel, we actually end up pushing quite high to the upside until we break back in and through the Gaussian channel to the downside. Okay, we push upwards until we break into it and through to it, and that's when we create that new downtrend. So technically, guys, this is all uptrend. Okay, from that point there, this is all uptrend. The downtrend initiates here. Again, same thing, uptrend, downtrend initiates at this point here. We continue down. Okay. Now, the uptrend can be cut off pretty short if we do have points of major rejection, like we said, 200 moving average, 50 moving average. This was just a rejection altogether. But if we do push through the Gaussian channel again and push to the upside, that is where we're looking for macro reversals again. That will occur at around that 20,000 level, which lines up with that descending trend line that we drew in before. So it's kind of all lining up as painting the perfect picture. So I'm going to leave it there, guys. We've talked about everything I do need to talk about today. I hope you enjoyed the video. I hope you found it beneficial. Again, quickly summarizing the short term, don't take longs here. This is intra-range trading. We're not entirely sure on what the structure is, if it's a descending channel, if it's a pennant. It doesn't matter what it is. We are closer to resistance, okay? We are closer to resistance than we are to potential support, whether it be that descending trend line, whether it be that trigger point. We're much closer to resistance. So if you're taking longs here, your longs, according to risk return, are more unfavorable. There's no point doing it. Wait for the continuation to the upside. If we do break here, to look for more longs. Again, your longs should have been taken down here. If you were entering shorts down here, you were trading on the assumption that the price will continue before it did, okay? If you're entering longs here, you're trading on the assumption that the price will continue before we have confirmation that it actually will continue. Essentially, you're gambling. You're taking a risk without data. If you're trading like that, reanalyze how you're trading. Okay, that being said, I'll catch you tomorrow. Cheers.